Hello, today is the 1st of March 2011. Welcome to the second video on today's silver log. In the first one, I looked at the SLV shares since the opening back in 2006 and how during the time frame of 9:30 a.m. to 4 o'clock, silver has been down 46%. Meaning, when the New York folks, the Chicago folks, or the North American folks are in control, they hammer the silver market, and they pretty much do with gold. Up only around 9% since GLD has come into existence back in 2004. Overall, this market, if you were only to count this time frame, is very choppy, very sideways, more than anything. I guess this would be your by the book, choppy, neutral market that you can find. And, well, if we go from 4 o'clock Eastern to 9:30 a.m. Eastern time, we get a bull market by the book. Higher highs, higher lows, and clear uptrend. You can't get much clearer than this. In fact, if we draw a trend line, we can state that things are pretty bullish if we only count the after hours of the New York time frame. Same thing is true with silver, but just thought I would put this information out. Now let's go on to what's going on right now. And, well, oftentimes from failed moves can create fast moves. What's the failed move here? The failed move is a break below this support level and this couple week period going below the 1350 level. Also, if you look at a failed move, you take the Fibonacci from this high, the Fibonacci from this low, as long as it can stay below 61.8%, somewhere approximately over here, then this selling is a success. If it, however, is not able to stay in and around this approximate area, then this is a failure. And it's a failure. Gold is very close to its previous highs now. And as it gets to these highs, what we might see, only a potential possibility, is if we get a little bit of selling, maybe back to 1375 now, that we might potentially create a right shoulder for an inverted head and shoulders pattern. But the secret is after it, if it goes down lower, to hold at the absolute most 61.8% of the difference from the lowest point here from 1310 or so to whatever the high is. If it finds a higher low here and comes back to 1425, that's great. And then it comes maybe back down to, say, 1380 or something, and then back higher. As long as it makes those higher lows, then I would expect it to break this resistance and then test in around the 1500 level. As far as silver is concerned, I was pointing out that we had a break of this trend line as we were in a downward range, more of a bull flag kind of pattern. What a bull flag means is after you've had an uptick, you are correcting in some sort of sideways action, which is what happened since then. Two up ticks in a row, which has taken out the previous highs of $34 and 33 cents. So we've made new highs today. As far as potential resistance is concerned, if we take a look at some Fibonacci, we can take the lows of 2630 and the highs of 3128. These were the lows and highs from, we'll say, January, I guess. It's from this level and this level. Now, what's interesting about that is if we look at the 161.8, that gives us a mark of 34.36, which was pretty much a hit for previous resistance. So the next one translates to 39.34. And even from this difference in here, from this low and this high, we're looking at 35 and change. But I roughly would like to think that the chances that we have a nice uptick up towards the 38 to 40 area is pretty decent. We may come back and maybe test some support. I would like to see it come back maybe to this previous high on this line here, roughly at about 33.80 or so, as a nice little area for support, or maybe to burst out maybe up to the 34.80 to 35 level, and then come back to the 34.33 and have support at previous resistance. I think that's what I wouldn't mind seeing, at least for trying to time direction a little bit easier. But overall, the market is in a very, very stellar uptrend right now, and there's no need to give any benefit of the doubt to any sellers right now, unless, of course, you do it from maybe 9:30 a.m. to 4 o'clock Pacific time. But overall, on a 24/7 basis, the buyers are in full control of this market right now. And until that, just leave it as is, I guess. As far as the gold to silver ratio, and really this is a silver to gold ratio, or how much it costs to buy silver, or gold for that matter, as this is the ratio of 1 ounce of silver to a 1 milligram of gold. So you would need about 750 milligrams of gold for 1 ounce of silver. And it hasn't made new highs as of yet, priced in gold, because it's still below this peak in here. But it's another way of measuring it, and it's at some point you're thinking, well, how long are we going to measure this in dollars? What is it? Another 6 months? Another 12, 18, 24, 32? Timing is very difficult. Maybe I should know because I watched CNBC's Fast Money, and, well, Peter Schiff got ridiculed big time for not knowing whether the gold to Dow ratio would become even within 1, 2, or 3 years. He was heckled on that. Very, very, very interesting, to say the least. But my view is that at some point in the not so distant and the very near term future, we will no longer be wanting to price silver in that of fiat currency. Thank you for watching.